Holy smokes, everybody. Just when we thought this stock market drama with Evergrande was over, Papa Powell was pumping the stock market with saying he's not going to taper. The Public Bank of China was pumping billions and billions into the repo market during a liquidity crisis. The lamestream media and the stock market analysts were telling us, don't fear, nothing's wrong, keep putting your money in the markets, everything's fine. Well, boy, do I have some news for you, because Evergrande just missed their bond payment that was priced in dollars. They said they made their bond payment in the Chinese yuan earlier this week, but who knows if they really did or not, because details were very secretive. We can't really trust the data coming out of China, but the data we can somewhat trust, the bond payments that were priced in US dollars, the bond payments that were due to go to the foreign investors, like in the US, well, no payment was made. And this means the days are now counting down to Evergrande defaulting. So everybody, let's not waste any time. Let's get into the news, the facts, and the data of the situation we're in right now. Okay, so first things first, something I want to address. The past 2 days, the stock market rebounded because Evergrande says it did make its payment in the yuan denominated bonds, and also the Federal Reserve, who some people were expecting they'll say they'll taper, they're saying, okay, we'll taper soon. So they've gone from not even thinking about tapering, to thinking about tapering, to saying they will taper this year, to now saying they'll taper soon. So maybe next month they'll say, we'll taper very soon, which is just a complete joke. We all know that they can't taper. If they do, this whole bubble that they've inflated, the one they've artificially created, will come crashing down. So they keep acting like they will do something about inflation. They did actually admit that, hey, we've reached our inflation targets. It looks like inflation is going to be bigger for longer. And they also did say that they have made substantial progress towards their employment goals. But again, they're still saying no taper. Something else that's been happening, which has been boosting up the markets the past couple of days, but which is now making a UE, is the Public Bank of China has been pumping billions and billions into the banking sector every day among the panic and the liquidity crisis that the Chinese economy and banking sector is in right now. And of course, I've been watching, the lamestream media and all these stock market analysts like Jim Cramer. They've been saying, oh, this Evergrande issue, it's all gone away. It's all been dealt with. Just like they said in 2007 and 2008, they said, look, no problem with, Lehman Brothers. It's all good. All the issues have been sorted. Well, people, the markets didn't bottom until a year and a half after that. So it won't crash overnight. These things, won't happen in a month, but we could see a slow, gradual grind down in the markets over the next year. But look at this, everyone. What? Diggity dog. No coupon payments have been made and Evergrande shares plummeted 12%. Again, what have we seen over the past couple of days? Evergrande, shares were up around 15 to 20% yesterday after they announced that, that they will pay back the debt that's priced in yuan. Everyone thought it was all great. Well, now when it comes to the US bond payment, people realize now they got no money and a default is imminent. And listen to this, everybody. This is crazy what's going on right now. So one portfolio manager with a private bank told CNBC that no interest payments for the March 2022 bond had flown into his client's account as of the end of Thursday. His clients are mostly wealthy individuals and said the portfolio manager, who has been in the Asian market fixed income for 15 years, he did not wish to be identified as he's not authorized to speak to the media. So again, everybody, the media is trying to downplay this. The central bankers, the bankers, the stock market analysts, they're all trying to downplay this, saying, look, there's no problem here. But people, when would ever a central banker or a banker or, a stock market bull say, you know what, we stuffed up really bad. We invested in this company, that's going to go bankrupt. We're going to lose millions, maybe billions of dollars. Sorry about that. And they're also not going to come out and say, you know what, I think the stock market in China's screwed. I think, it's going to drop about 50%. You should probably take all your money out now. And I think the Chinese property market's going to collapse as well. They're not going to say that, people. They're going to say, keep putting your money in, keep buying in. Everything's fine. Buy the dippity dip. Meanwhile, while you're buying the dip, while you're buying their bags, they're selling and cashing out and running for the hills. And something that's quite unfortunate as well, Evergrande is not just in the property market, it's also in the electrical vehicle market and has not paid its employees. And also something very interesting that happened with Evergrande is in June, top executives actually cashed out all of their positions before this big crash in Evergrande share price. And we have seen in China, this is causing a bit of social unrest with investors. They've stormed the headquarters at Evergrande and they're demanding their money back, and they're not happy at all. And unfortunately, and very sadly, some people have lost generations of wealth through investing in these wealth management products, which they force their employees to buy. Otherwise, they won't be able to keep their employment there. So pretty much Evergrande has been a Ponzi scheme. But have a listen to this, everyone. So Citibank is even warning that the housing sector is at a huge risk of falling into a bear market. It says home prices are at a risk of a meaningful downside regardless of what happens to Evergrande, Citigroup and analysts said in a note titled "A Bear Market in Chinese Property." Because look at this, everybody. Again, they're saying, oh, look, they made their payment this week. Everything's over. It's all great. They've still got 669 million worth of payments are due throughout the rest of the year, and we can see the black, squares is US dollar bond payments, and the pink blocks are the Chinese yuan payments, and we can see a lot of these payments are priced in US dollars, which the Public Bank of China can't print. So everyone, what does this mean for you and me in simple terms? Well, this means this saga with Evergrande is just the beginning, and it's only just exposing the bigger issue in China, the $55 trillion housing bubble, the biggest housing bubble in the world, because again, in China, people just buy empty shell apartments. They don't even rent them out. They just buy 3, 4 of them like you just buy a stock. They just leave them there because a lot of Chinese people don't like buying old apartments. Also, they don't want to inherit the previous owner's bad luck. And they normally just try to flip it in a few years for a profit, and keeping it brand new and having no one in there means they'll get a better price. And so, of course, this is what's fueled these go cities. This is what's fueled the commodity boom and a lot of demand for commodities and materials, which has boosted global growth and global GDP, and has definitely helped out the Australian economy and the Australian mining sector through higher iron ore and coal prices. But now iron ore has collapsed, and the only thing really holding up the mining industry in Australia is the surging coal prices. So what's actually worse than Evergrande defaulting and Evergrande going down on its own it won't cause a global financial crisis. But if this destroys confidence in all the property developers in China, as we are seeing a lot of other Chinese developers' share prices are plummeting, and if this causes a Chinese housing market downturn of 20%, well then that's $10 trillion worth of wealth wiped out in a year or two. And of course, that will have contagion, ripple effects that'll affect the Chinese banks, because a lot of their business has been, doing business loans, because some people are using business loans to buy property because they can get better deals or better interest rates, and they have a lot of exposure to the real estate market. So if the real estate market in China goes down, also the banking sector, along with the developers, will go down. And this may lead investors in China to have to sell some other assets like foreign stocks, like foreign bonds. We're seeing cryptocurrency selling off, and also they may have other real estate projects around the world, like in the US, Australia, Canada, etc., to cover their losses. And just like in 2007, when the Dow Jones peaked in October in 2007, again, this crash won't happen overnight. It didn't hit the bottom until around March 2009. So, when I'm doing these warnings, I'm not saying, the stock market's going to crash 50% next month. This will be a very volatile time. We could have, days where it goes up 2%, then it falls 3%. We could have months where it's up, months when it's down. But if it does cause a global financial crisis, we could just see a slow, gradual decline in the stock market over an 18-month period. But everyone, that's just my thoughts and opinions. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for all the new subscribers that have joined the channel over the past couple of weeks. And of course, I'll see you all in the next video.